Welcome back. Our next guest manages only $2.7 trillion is BlackRock's CIO of global fixed income. He's also the head of the global allocation team. Let's bring in BlackRock's Rieder. Mr. Rieder, welcome back.
Thanks, Scott. Congrats on 10 years. Thanks for having me again.
Thanks. It's good to have you back. And I'm sure it's easier for you to be back because you said stocks are going higher. I think those were your exact words. So that the easy part's out of the way now, Rick. Where are they going from here? That's what we want to know.
Can I rest on the last call? Listen, I think they're going higher. I mean, Scott, I still, first of all, I'd say from two different perspectives. One, I think interest rates have made their move. I still think you can get a bit more out of rates. But I think the fear of, gosh, we're going to have dramatically higher interest rates dulling the valuations of the equity market, I don't think we're going much further from where we are today. Secondly, when I look around, there are still a lot of stocks to buy that make sense. I was actually looking at the auto companies the other day. Boy, they're pretty reasonable relative to where they've been over time. You've got what is an inventory drawdown, a forward demand function. There are enough stocks out there that have reasonable valuations that, I think we're going to keep going higher. And by the way, I think the earnings numbers, some of the ones, you're definitely seeing some pressure on margins from the staples companies, but, you knew that was going to happen. But, boy, I think the rest of the earnings picture, companies are pricing it through. And I think people underestimate, we're doing a big analysis on this for a call I'm doing in a couple of days. When you get this sort of inflation of the equity market or the impact on the equity market, stocks do pretty well. And there's a real, if you can get passed through, which I would argue, given the demand function, you can. Well, I think the earnings numbers are durable. And so I think we've got some upside still to go.
Well,
and, by the way, the rich part of the fixed income market or the interest rate, it's not very interesting. More flows will continue in the equity market.
4,500 is where we sit on the S&P. What's reasonable between now and the end of the year, do you think?
Tough call. Could you get another 5 to 8% out of the market? I think so. I don't see any reason why not. I think tech's got some upside to it that could be even more significant. So, I definitely think you can get another 5 to 8, maybe even 10. I think people underestimate. You said it earlier on the show. I know we've talked about it for months now. The amount of liquidity in the system is epic. The numbers I was looking at are pretty extraordinary. If you go back 20 years ago, it was $3 trillion of global liquidity. It's 40 today, 40 trillion. And it was 6% of GDP 20 years ago. It's 47% of global GDP today. Even the Fed tapers, they're not reducing the size of their balance sheet. They're just slowing down how much they're putting in. I think there's a lot of flows. And look at the size of money in money market funds today and where they're going to go, and pension funds and endowments.